Hey guys, welcome to the channel. Today we're talking about oil. Oil has been on an absolute tear recently and I think it's going to keep going higher. I'll give you heaps of reasons why, so kick back and relax and we'll go through it together. If you stick around, I'll give you some of my top oil stocks. I own 4 different oil stocks and they are the best performers in my entire portfolio. Let's begin. The reason why crude oil keeps going up is because there is a supply and demand imbalance, plain and simple. The supply has simply not kept up with the resurgence in demand. I'll give you a lot of charts to illustrate this point. Let's go through it. This is probably the most interesting chart. We see here that the brown line, which depicts oil consumption, has been higher than oil production for an entire year. Crude oil demand is already at or above pre-COVID levels, but production is still far below it. This chart shows US rig counts against the WTI crude oil price. As you can see here, rig counts in the US are still below 2019 levels, even though the price is higher. This chart is a month old and the new rig count is higher, but not by much. To see how stretched the supply is at the moment, let's have a look at another chart which shows the crude oil inventories of OECD countries. The current year's inventories are in blue, which shows that inventories are currently below the minimum of the past 5 years. Well, what does this mean? It means that countries are running down their stockpiles of oil in order to meet the higher demand. And what will happen once these stockpiles run out? Well, I'll let you use your imagination. I think the reason why OPEC Plus is not taking any action at the moment is because they probably believe that the supply-demand issue will resolve by itself sometime next year, and they're just letting it run its course. One thing to note is that Saudi Arabia's state-owned oil enterprise, Aramco, is already working to increase its maximum output from 12 million barrels per day to 13. This is set to take years. It just goes to show that oil supply is inelastic. You can't just turn the taps on and off. Increasing the supply of oil takes time. Even President Biden himself has conceded that there isn't much that can be done to reduce oil prices, and his guess is that it should stabilize sometime next year. Now this is where me and you, we can make some money. The period between now and the time when the supply deficit goes away next year could see a huge spike in oil prices. I have outlined this period here. I'll give you a couple of reasons why. First, many countries around the world haven't fully reopened, and when they do, the demand for crude oil could be higher than expected. Remember, aviation is still depressed and jet fuel usually comprises 6% of total petroleum consumption. Now that might not sound like a lot, but in today's tight market, that could make a huge difference. Recently, countries in the Asia Pacific, like Australia and Thailand, have announced that they are opening up international travel again. More regions around the world will soon follow. Another reason why crude oil is so expensive at the moment and probably going to keep going higher is that every other energy commodity is in hot demand. Let's have a look at coal. Due to various reasons, the price of coal is at an astonishing 10-year high, as you can see in this chart. Demand substitution for coal might start soon, and some utility companies may even begin to use diesel as a fuel source. And since diesel is a product of crude oil, it's another boost to its demand. Everyone wants energy, and they can have it for a price. Furthermore, in the Northern Hemisphere, winter is coming. Beijing has just come out to say that they will crack down on companies hoarding coal. Yes, hoarding coal. But I'm not sure how effective they are going to be in this regard. I personally think that we are going to see high energy prices for some time. Also, if we look back at recent history, crude oil is known to have violent moves to the upside. In the 2000s, crude oil rallied for a stunning 5 years to top out at over $147 a barrel before crashing in 2008. This is understandable since it was during the GFC when demand for oil cratered. Currently, we are gunning for that $100 crude oil price. On that note, many commodity analysts are predicting that we will reach $100 crude oil in the near future. I personally think we can get there by year end. If we switch over to the daily chart, we can see that crude oil has been going steadily higher. Not too fast, not too slow. It's a very smooth rally. Nothing here suggests to me that the price has topped. So how are we actually going to make money out of this? Well, let me give you some of my top oil stocks. I typically prefer the mid to large cap sectors, so between $5 to $40 billion market cap. I believe that these market cap companies provide the best bang for buck in pretty much every industry. I don't really buy into mega caps because they don't really have that much leverage to the crude oil price. So for example, if crude oil goes up 20%, a huge company like Royal Dutch Shell might go up 20%. But I want to see more growth. I want to see more leverage. I want to see something go up twice as much as the price of crude oil. So anyway, without further ado, here are my top picks. Occidental Petroleum, Diamondback Energy, Marathon Oil, Sasol, Devon Energy, Ovintiv, PDC Energy, Imperial Oil, and Chesapeake Energy. I own the ones which are highlighted. Oxy is a pretty leveraged play because it carries so much debt, and FANG is an absolute cash cow with low debt. FANG is my best performing oil stock at nearly 50% of profit in just over 2 months. I prefer names with unconventional assets in the United States because they are more leveraged to the price of oil. Many of the companies I have listed operate in the Permian Basin. If you like small caps, my picks are Antero Resources, Matador Resources, Denbury, and California Resources Corp. Some good oilfield services picks are Halliburton and Schlumberger. If you want to take a more diversified approach, you can buy the XLE or OIH ETFs. The XLE is a diversified ETF filled with large oil companies. The OIH is more tailored towards oil services companies like Halliburton. The key thing to remember is that you want the right stocks for your risk appetite. I personally avoid the smaller caps like anything under $1 billion market cap because they're just too volatile. And I also avoid the huge mega caps that are anything over $100 billion market cap because they're not volatile enough. Having said that, Exxon is actually up 90% year to date. That's nothing to sneeze at. Anyway, that's it for today, folks. If you want access to my portfolio and see everything else that I'm holding, then click in the link in the description below. Otherwise, please hit that like and subscribe button for more content. And until next time, happy investing.